Hi, this is Clark Harvey, mortgage loan originator with Jocelyn Waters, also a mortgage loan originator. And we're going to do a simulation on the all-in-one loan. And let's go ahead and start off. I'm going to share my screen here. And we're here at First Rate Mortgage website. The homepage, click on this investors right here link. It goes to our investors calculator directly to it. This is all-in-one. All-in-one loan is a first mortgage HELOC that can be done on a primary residence, secondary residence, or an investment property with as little as 10% down and a minimum FICO of 700 currently, and have to have 10% reserves of the loan amount. But we'll go in those details, and those things could change at any time, but that's for a primary residence. For an investment property, you have to have at least 20% equity or down, depending on what you're doing, refinance or purchase, and a 720 FICO currently, and that could change at any time, and also 10 to 15% in reserves, depending on your situation. Okay, that being said, we're going to go ahead and get started. We're going to compare a 30-year fixed. If someone was buying a new home using a 30-year fixed, current rates, and compare it to the all-in-one loan, first mortgage HELOC. There we go. So what's that? It's going to be for primary residence. What estimated home value is it, Jocelyn?
I'm looking in the $500,000 range.
Okay, 500,000. How much down?
I've got 10%.
Okay, so 450 would be the loan balance. 30-year fixed, current rates around 6.5%. We're going to hit the next button right here. And pay net pay.
I net $3,500 every 2 weeks.
Okay. Weekly. So it's about $7,583, 91 grand. And taxes and insurance on a property like this, just an estimate, somewhere probably around 350. Percentage left over, you're not spending all your money, so most likely you have about 20% roughly left over.
Yeah, that sounds about right.
Okay. All right, well, let's calculate the results and see what it looks like, the all-in-one loan versus a 30-year fixed. So the all-in-one loan would be paid off in 15.3 years versus 30 years on a 30-year fixed, saving you over $200,000.
Wow.
And you'll still have that line of credit available to utilize at any time. You know, if life happens, you get laid off at work, injured, you just never know, life happens, or you want to buy another property, buy a car with that equity. So now you turn your house into an asset. And our clients, what we do here is help them build wealth through homeownership. And this is one vehicle that we utilize to do that. So right here, your rate assumptions, this is an adjustable rate mortgage. We do have a 3 and a 5 year fixed option, which right now we're recommending a 3-year fixed option or the 5-year. And looks like right here, our index. Now this is based, I'll show you right here. You got a maximum rate. Historical graph right here. So this is right here. It's based off the 1-year CMT rate, historical average. Effective funds rate, currently, it's 3.75 to 4% as the current target. Historical average is 1.93, so it's a little bit higher, and that's why we're recommending a 3-year fixed on this. So with that being said, the Fannie Mae, Freddie Mac average, historical average rate is 5.192 over the last 25 years. There's a 25-year history. November of 97 in purple, and the orange and blue are what the 1-month treasury, 1-year treasury would be. All right, let's close that. Return to our rates. Let's look at this graph right here, which is a really cool pay down summary. So as you can see right here, your average minimum monthly payment on the all-in-one is about $1,575. Minimum monthly payment on your 30-year fix is $2,844. And if you get late on that, it goes on your credit, against your credit on 30-day late. If you don't make your payments for 3 months, then you're going to go into a default with the lender. With the all-in-one loan, if you're paid ahead and you miss a month or two, it's not going to affect your mortgage or late. So you can see the average principal reduced monthly in the all-in-one is over $3,100. Average principal reduced monthly on the 30-year fix is $1,250. So let's look at this pay down graph. Look how quickly it's paying down the principal, the all-in-one. How's that work? Jocelyn, can you tell us?
Yeah, so your interest that you owe on a loan is calculated every single day. What is the loan balance times the interest rate? And then every single day it's added on. So by reducing constantly putting all of your funds that you have from all of your income onto the loan, you're like on a daily basis, you're just reducing that loan amount. And so you can just pay it down so much more quickly.
Look at this.
I don't know. I was just gonna say, I don't know about you, Clark, but this is something that bothered me a long time ago. Is I wanted to pay down my mortgage in the past before I had this loan, but it bugged me that it was trapped in there. So then I didn't want to. So then what would happen? I just end up paying more in interest because I didn't want it to be stuck.
Right.
But this way you just throw all of your money into it. No big deal. You can turn right around and pull it back out. But you can reduce your balance on a daily basis. And to me, that's so powerful and so incredibly exciting.
It really is. I mean, I get kind of giddy with this loan, geek out a little bit, but look at it. Numbers don't lie. It's just math is what we tell people. It's the truth. All-in-one principal paid in 7 months, almost $14,000. Principal paid in 7 months on a 30-year fixed without paying any extra principal is almost $3,000. Significantly different. And if you go down here, year 2, you're into it. 24 months, now you're paid almost $50,000 in equity that you have on this loan. This principal paid only a little over $10,000. So you can see how quickly this accelerates just by depositing your check into this account. It sweeps right into the mortgage first, pays the principal first, whereas your 30-year fixed, the amortization schedule is just horrible, especially the first 5 to 7 years, which is what most people keep their loan for, whether they move or refinance. They're always chasing the rate. Guess what? The all-in-one, you don't have to chase the rate anymore.
Yeah, because they build just enough interest into the payment to make it so that it will take 15 or 30 years or whatever the case. But that being said, because you're not really paying that much interest, or you're not paying that much principal, you're paying a lot of interest. But look at these months. If you look at you were at 127. I was looking at month 127 or even 140. Look at that. The loan balance is only 12,000, but if you're in a traditional mortgage, a fixed rate, you're still at 365. I mean, that's night and day. And then you could just, what I did is I would pay my HELOC down to a certain amount until I had plenty of money in reserves, and then money for another down payment for another rental property. And then I'd buy another one. Then I'd pay it down and buy another one, pay it down, buy another one. And I just always had, it was just like this train that once I got it going, it just started going faster and faster, because then you have more income from the properties to pay it down faster. And then next thing you know, you buy another one faster and faster. Right. And it just really accelerates your wealth trajectory. So
there you have it. This is a great product for someone that's an investor minded or not, who just wants to pay down their house quicker. This is just basic math. Look at the difference here. This house is paid off at 143 months. And this one still is a balance of $362,000 still to go to pay on that mortgage. That's a big difference.
It's crazy. Yeah. I know, I geek out on it too. To me, it's so incredibly exciting. And I want to see others catch the vision of this, because I think we could really change, just like I said, the trajectory of a lot of people's lives. You know, I had a couple of condos, you know this, but our
Yeah.
audience doesn't, that I paid, or I sold earlier this year. And I've been in kind of a holding pattern too, you know, with the market and stuff. So I just paid down. I've got 2 different lines of credit. I paid them down. One of them, I paid the majority of it off with the proceeds of the sale. And I haven't, my payment was like, back in July, I think like $75 on one of my rental properties. So it's like all the cash flow, right? But I
Yeah.
actually haven't paid that since I think July. I haven't even made the payment. And so they just tack it on. I think my payment's like $90 now. No
That's
big
awesome.
deal, you know, because I'm just doing other things with the money. So I'm not really that concerned about it, but it's pretty cool. I cannot pay my payment, as I haven't for months, and I'm not in default.
That's awesome. That's awesome.
And then my other property that I live in, I think my payment's like around $300. So, but the money's there, and I invest it when I see other opportunities, which is what I do. And then I lend it out to people. They pay me a much higher interest rate than I'm paying on the HELOC. And then when they pay me back, I put it back onto the HELOC until I'm ready to do something else. There's so much flexibility.
And you found this product on your own.
I did. I was debating. I was like, should you pay off your house or not? You know, I just had this question. So I was just doing Google searches, and I found a company called Replace Your Mortgage. They don't offer loans. What they offer is, really, I paid honestly $3,000 to learn the information and to learn about lenders who offer it. So really, that I really paid $3,000 for a list of lenders ultimately, and they're a great company, but with a lot of education. But you know, we're offering you this information for free. So,
Well, let's wrap it up here real quick. I want to point one thing out, that people oftentimes chase the rate. And in this product, it's not about the rate, it's about how this loan works. That's the magic with that sweep account. Look at this right here. Interest as a percent of principal, 50.1% versus the traditional mortgage. Interest as a percent of principal, 127.5%. That's just craziness. So we invite you, if you watch this video, to reach out to either of us. We're happy to do a very personal comparison on your property. If you have an existing property, or if you're looking to buy a property, even if you're looking to refinance, get equity out of your property, a lot of people are right now, we can help with that. And it doesn't cost anything. It takes 30 minutes, and we'll be happy to do that presentation for you. You can reach us at Jocelyn. What's your number?
It's 435. I was like, are you wanting email? 435-256-5954.
Awesome. And I can be reached at 801-562-9100, or you can go to the website at www.1st-ratemortgage.com and just select a loan officer right here at the top, and you'll see us right here in the drop down. Thank you so much, and you guys have an awesome day.
Okay, thanks. Bye.
And I'll clip that.